I'm going to have a chat with Makwe Masilela. He is the Chief Investment Officer at Makwe Fund Managers, just to get an overall picture from him about what's happening on the markets. A very good afternoon, Makwe. Just tell us what is happening on the markets and what are the key drivers today.
Afternoon to you and to the viewers. The market's not doing too badly. Remember, yesterday we closed up for 2%, but we are now used to the fact that the minute you get a rally, the following day it gets sold off. And anyway, the U.S. was closed yesterday. We still have to see what they have to do come after trade. But so far, the market went negative, but we are up not 4%, and it has been driven mainly by our industrials, and the rent is just holding okay. And remember now also the PM numbers that we got from China, the official one, yes, they've seen an improvement compared to April, but it's still under 50. We know 50 is the mark between expansion and contraction, but now they're sitting at 49.6. But the general sentiment is kind of okay. Markets cautiously up.
Of course, we did hear that yesterday, or even earlier today, the oil price breached the $120 a barrel mark. What's going on there? What are the fundamentals? And of course, here in South Africa, we're terribly worried that we're going to be clobbered with an increase in fuel prices of around R3.80.
I'm not sure whether these are the fundamentals or are the emotions, because we have seen the European Union might do at least rate that at the end of the year will be exposed with 90% of oil from Russia. So it's more of those sanctions against Russia. Remember, they've been struggling to be agreed on the 100%. So now, given that the Chinese government started to open up as tomorrow when it comes to COVID-19, we expect some demand to pick up. So now demand is picking up at a time where now people won't be supplying more. And also remember, the driving season in the U.S., there's also a bit of demand coming from that side. So it's a kind of a mixed bag that, yes, OPEC, there's a meeting on Thursday with the allies, and remember, Russia is also a member. We don't think they will succumb to the pressure that has been coming from the Western countries to start increasing their output more rapidly.
Now, Makwe, I don't want to ask you just about today's unemployment print alone. It's a slight decrease in the unemployment rate, but it's still quite high at 34.5% in the first quarter. But when you look at all the various economic issues that are taking place in South Africa, how are we looking in terms of people being interested to invest in South Africa, not in terms of FDI, but a capital markets investment?
We're not looking okay, to be honest. And as you are saying, these numbers, they don't include something. It doesn't show the the load shedding. It doesn't show the flood that came in case they can. And 4.5, yes, people might say the decrease, but generally our economic outlook is not okay, because if the economy is not growing, there's no way people will be able to hire people. If the government doesn't create an environment that is conducive for businesses to expand, then there's no way people will create jobs. And with this high cost of electricity, petrol, you name it, then businesses will make sure they try to cut on costs. And the cost here, we are talking mainly employees. That the minute you do that, they will not do hire them again.
Makwe, your line is terrible, so I think we're going to conclude the interview there. But thank you so much for your time. As always, Makwe Masilela, he's the CIO, the Chief Investment Officer at Makwe Fund Managers.